All right. And any questions?
Yep.
Any comments?
Ramin, I have a question for the to be treated as a trader status.
Yes.
Do you firstly have to mark the market, or you can
Yes.
keep the long term? No.
No. They want you, that's one of the conditions. They want to make sure that you plan it ahead of time because their reasoning is, Sean, let's say it's November, right? And you look back and you really had a bad year and you say, wow, this would have been a great year to be, doing the mark to market. So you go and say, well, for 2021, I'm going to do as a day trader. So they want to make sure you're in advance. The only way you can get away from it is if you have never, which most people have, never filed income tax return, they allow you to do it in the first 2 months. And for the previous year, you can allow to do that. But other than that, if you've been filing taxes, and then that's my understanding, Sean. Again, I'm not tax advisor, but basically what I know is we have to do it ahead of time rather than after.
Nice.
Hey, Ramin, I've got a similar question. So,
Yes, Mark.
if you want to elect as a mark to market person, is there a form you fill in? Because I obviously from the slide you have up there, we couldn't do it for this year. So I guess for 2022, by April the 15th, do I have to send a form in to the IRS?
Yeah, so there's not a form. I think there is a check. There's a place you actually check mark. So you just when you're filing your taxes, you do actually just check mark and say that you like to be mark to market.
Okay, so
Your accountant should
when
do.
I'm filing my 2021 taxes, that's when I say
Correct. Precisely. So
it's
it's in April or March or whenever it is, then you decide and say, well, I'm going to do mark to market. You let that tax advisors to check that box for you. So, yeah.
And then, Ramin, I had another question that's sort of slightly off topic. If I was to, so for Jacqueline, if she gave me $20,000 or I took $25,000 off a friend and I traded that money for them. So if I had an account with like, I don't know, about $100,000 in an account and then another 50 came from two people and I split the profit, is that something you can do? And how do you do that?
That's a good question. So this is, again, it's a gray area, Martin. So the best bet, if you want to keep it simple, basically, again, you're opening a can of worms in some ways because what you're doing is, as a private individual, you're allowed to have access and manage money for like family members, let's say, or sister or mother or brother, and so you don't have to register with FINRA. But if you start more than, I believe it's 4 people, then you have to register with the Security Exchange or FINRA actually for your state. So now when you do that, and you basically kind of inviting a little um, uh,
Attention.
So this is the way I would handle it. You just, again, it depends how close you are. So I wouldn't do it with anyone unless you're really close. And you mentioned like Jacqueline, and then you can do it, and then you just share the liability, and then you just net the returns after the taxes. So the question is, who will have a better tax bracket? So sometimes it's like, for instance, for me, because I do a lot of, for instance, futures. I end up I manage my investments and my trades, and it becomes pretty kind of low margin in some ways. A lot of times I manage it that way, so I ended up having if I would have just done the regular, I would have paid a lot more. So I kind of take a lot of deductions, for instance. So it becomes more tax advantage in that way. But and that's what I would do, just not to invite attention. And but it depends how close you are to that person. And
Jean-Claude,
you will have it. I'm sorry, what?
I was going to say, Jean-Claude wanted to give me $50,000 right for him. So
Who wanted?
Jean-Claude.
Oh, Jean-Claude. Okay.
I'm just joking, Ramin.
I won't be surprised. I mean, you guys are so good. You know, you might want to do partnership and eventually do the hedge fund. But no, what I would do is again, I'm not a tax advisor or anything. It's just you want to first of all, if somebody wants to manage it, you just have to be very careful because some people. I mean, I get. I mean, just be honest. Just like a lot of people say, well, we have these accounts. Can we give you our password and you just could do it? And it's definitely a no-no. I mean, this is something. It's a lot of responsibility, but also obviously, you know, you got to be very careful of all the information. If something goes wrong, boy, you're the first one with the heat. So yeah, but I don't know if that was clear, Martin, but I would be more cautious than, unless you're really close. I mean, obviously I can manage my mom's money, so that's different, but I just, I would be careful with other people's money.
Thanks for that.
You're welcome. Let me ask, was this, is this a subject that was helpful? I mean, it's something that I just want to be different this time. And
I mean, this is like really super helpful because I've not really thought. I've obviously been doing this now for a while, and I've not really thought about the tax implications. So it's set off a couple of light bulbs in my head.
Oh, okay.
Ramin, I did have another question. Sorry,
Sure.
we were talking about doing 20 trades a day. So,
no, it's 4 or 5 trades a day.
Ramin, so if you're trading 10 contracts, would that be like one trade or is that like 10 trades?
Very good question. So the way they look at it, again, I'm not a tax attorney, but let's say you opened it and then you're closing it. So basically, if you are increments, I believe it's increments. So that would be like 5 trades. Let's say you did 10 contracts and you sold 2 at a time. I'm assuming that would be 5 trades. So something like that. Now, I mentioned that wash sale rule. Again, they're not very clear. So what they're looking at, let's say you bought 1,000 shares of XYZ company, and now you're selling 200 shares here and 400 shares there. They have a little complicated wash sale rule. So how does it happen? Do we put like percentage of this, let's say only fraction of that is going to apply to wash sale rule, or is it going to be all of it? So it does create something. So basically, as I mentioned, it doesn't even have to be that day. It just basically you bought something yesterday, you did like open 5 and close 4 from the previous day, and this day you close another 5 or 6 things. It just shows that you are pretty much active and hopefully you're making money. So that's what they're looking at. But again, they're not very clear, Martin, and that's the gray area. What I did, I went and I checked like about 6 or 7 rulings, and I just looked at the ones that they basically the courts rejected, and some of the things were mainly that the people had a full-time job and they were using this as a hobby. Some people will just do it like 1 hour a day, and then that's like once a week or twice a week, and they were claiming, oh, this is my full-time job. So those were pretty obvious, but they got rejected. Or some people had like 2 or 3 businesses and they commingled. Now, one of the good things is like I've done is like I kind of when I had my advisory business and things like it was very helpful because I was also using these and it was helpful from the tax deductions. But again, after 2017, things got a little more limited. Um, but so I cannot give you exact answer how they look at it because they don't even know. They just want to make sure you are continuity. Like someone like you who's been doing it every day um, will fall into that category. Mark. It's like, let's say you do 2 or 3 contracts and every day you do something new. And I put down like a week is like about 20. So it doesn't have to be exactly 5 or 4 trades a day, but something continuous.
Thanks, Ramon.
You're welcome. Any other questions or comments?
But I mean, I have another question.
Sure, Sean.
Yeah, you mentioned about the 1256.
Yes.
Does that come automatically, considered with your broker when you file, or do you have to specify that that's a 1256 somewhere?
Good question. So this is again, I have to tell my accountant that these are so what they are. So one good thing is when you do futures, unlike the stocks, when you get stocks, sometimes you get like 60. I've had like 150 pages of 1099 comes, it's like with the futures, I think it's like the maximum is like 5 pages, which is 1 page is just basically this, just the definition of things. So the your broker or whatever the clearing house is, they just send you a 1 page, and they say it's mark to market already for the futures actually. So basically all they do, they say this was your gains or this was your losses. There's only one box, that's it, and you just take that. And basically there is no separation. And because it's the futures or options on the futures, then you let your accountant know that this is, and then he would or she would file it accordingly. And then that would be 60/40. But you just have to mention to your accountant. So you don't, I mean, unless you do it yourself. But I usually do everything. I have managed all things I used to do even for my clients. I would have all my trades, everything is, but I would take it to accountant. She used to just input the information, that's it. So I was pretty on top of things, and I made sure that she did it. So you just want to make sure you're on top of whoever is doing it for you.
Okay.
Helpful, Sean? Is that?
Yeah, sure. Yeah. I did it myself. I didn't remember there's a option to choose whether it's a 1256 or not. Just yeah, but I do have those 1 page from my broker. Yeah.
Oh, okay, yeah. So when usually, because obviously the government gets a copy of that. So when you put down the futures and you put down there is the number of the coding and all that. So basically what is your clearing, and it takes into consideration. So it will
Oh, okay.
takes the,
Cool.
if you do TurboTax on things, they already take that into consideration.
Okay, cool. Well,
It's a good thing.
Yeah.
Go ahead.
Another question is, once you become like a trader status, when you subscribe to like say market data and other things, will you be considered a professional that's with a higher cost or not?
Very good question. So that's another area that basically the way that I understand, and I think when you go, let's say, open a new brokerage account, it's the NYSE and NASDAQ, they question you, for instance, if you want to do, let's say, stocks. Their biggest thing is if you are registered with FINRA or SEC. When they look at the professional trader, I believe this is another gray area. I cannot give you 100% answer, Sean, but my understanding was before, if I was a principal, if I was registered with FINRA, I had to mention that, not when mark to market. If I'm not, again, I'm not 100% sure on that. But like in my situation, it always applied that since I was registered, then I had to mention it to them. And of course, all my data and all that, they were like, I was paying 4 or 5 times the amount because they looked at you as a professional trader rather than for institutional rather than individuals.
I see. Cool. Thanks.
Hi.
Question, Ramin.
Oh yes, Jean-Claude.
So if you're like me, I don't, don't day trade, and I don't do that many trades a week. So in that case, my short-term gains just, go into, annual income, right? You don't have to be a trader or trader designation because I'm not making that many trades a week.
Correct.
So,
No. No. Basically, what will happen is, I believe the only deduction, if you were using margins, so basically on the margins, it still allow you, even after the new tax laws, they allow you to deduct that interest. The only gray area, I mean, these are things, again, it's good to have a tax accountant, but let's say you had $10,000 of interest on your margin, and what happened was your profit for the year was, let's say, 8,000 or 7,000. So you can actually take that, the deductions for that interest, which most of the time, sometimes we cannot take interest deduction. But if the money that you borrowed is for investment reasons, you can only take it up to the amount that you had profit. So if it was 7,000, then by all means you can take that $7,000 of interest, and then the 3,000 will carry forward for the following year. Now, one of the tricks that you could also use, remember, you have qualified dividends and you have ordinary dividends. So a lot of people like the qualified dividends because they don't, it doesn't increase their income taxes. But if you do have a large interest, again, I'm not sure if you do margins, but if you did margins and you had a large interest payment, especially some of the brokerages, they did increase their rates. What some people do, a trick that they use, let's say you had, like, again, go back to that 10,000 and you had a 7,000 profit, they change, which is very easy. So instead of doing when they're doing tax returns, instead of doing the qualified dividends, they make it ordinary dividends. By doing ordinary dividends, it increases your taxable income from investments. So let's say your qualified dividends was 3, they change that to ordinary dividends. They take that 3, add it to their 7 capital gains, let's say for short term, and then now they have 10,000. Now they can take the whole 10,000 margin interest rates or that loan and go as a wash. So these are the little things that, if as an investor you could do. But other than that, unfortunately, they have limited a lot of things for investments. It used to be subscriptions. You could have investment advice and management fees. They used to be deductible all the time and subject to 2%. Now you can't do that. So that's the limitations, and that's what the subject is. Do you want to be a trader or not? Take deductions. So,
thank you.
welcome. Okay. All right.
I mean, that just brought me another question.
Okay.
Isn't that much easier? You just open an account with like, let's say, LLC, a firm. Although later on you might have to pay yourself salary and pay the social security tax. But it made a lot of deduction relative easier, right? And you can deduct more, right?
Yeah. I mean, LLC, a lot of, if you're very serious, that would be a good way of obviously doing it. So that's why I mentioned, I mean, the only thing is you still, subject to whatever the taxes are, because it's like a limited partnership, and the C corporation is a lower taxes. So, but LLC is definitely a good way of doing things, and it's not that expensive to start it. So And then, like you said, you can always take salary. You can make yourself partner, and that's why I mentioned marrying the three things. That would be in a little sophisticated situation. If you're making a lot of money and now you have exposure, that might be a good way of having a minority, a general partner, and a majority partner. So that's one thing of having LLC, C corp, have benefits, and then have salaries, pay social security. Yeah, so that. But yeah, LLC is will be a good way of going, Sean. Definitely.
Okay.
And there are some actual accounting firms that they specifically do the trading accounting. There are not many, but that's what they do. And just have to interview them to make sure they're good. Obviously, Anderson, there's like Anderson Advisory. They do a lot of trading, and there's a few others. So, okay. All right. If there's no other questions, I hope you enjoyed this session. I look forward to our Saturday session. Should be not dull. And in the meantime, Martin, I have a guest on Friday, which I would not say the name of the recording, but it should be good. So I'll let you know on Saturday. So.
So somebody.
Yeah, very good. I mean, someone who's close by, lives nearby, so we'll have them over. So, and yeah. So, anyway, that's the gist of it. So, anyway, thank you again. Thank you for being with us. Have a wonderful rest of your week. Enjoy it. Be prosperous and healthy, and stay well. Thank you. Bye now.
Thank you, Ramin.
Thank you, Ramin. Bye.
Thank you. Bye bye.